No, I think clearly, Alex, first of all, good morning. I think, my sense is that with the kind of, headwinds in the global markets, what we have seen, I think the Fed meeting this time is going to be very critical. I think what comes out from the Fed commentary, clearly, that would be the center point action for today. As far as ICICI Bank numbers are concerned, definitely it's a breath of fresh air because I think numbers were slightly better than what the street expected. And I think numbers were much better if you compare it with other larger banks like Axis, IndusInd, and definitely the bank has put up a very strong show. So my sense is, in this kind of volatile market, we could see a little bit of weakness, but I think the bank has reported very strong numbers, and I think that would actually aid a little bit of value buying even at the current level. The stock has corrected, from higher levels. So definitely, it's a good addition to the portfolio at the current level if one takes the next 12 to 15 months. Although the banking sector is definitely facing key challenges in terms of deposit mobilization, pressure on yields and margins. But I think overall the net performance is pretty good. I think all businesses have done well. I would say that the sectors which would be keenly watched would be clearly the export-oriented sector. What happens to metals, what happens to pharma, IT. These would be sectors which would be in focus because these are clearly aligned to what the U.S. market does. And I think the way tariffs have been announced, I think very clearly markets are now on a kind of a volatile mode, as everyone is aware. Mr. Donald Trump, announces new, policy announcements on a daily basis. And during his previous regime, the markets used to behave in a very volatile fashion. So I think we'll have to accept the fact that volatility in the markets is going to increase significantly. And at least for the next 3 to 6 months, this is going to be something which all traders and investors will have to keep in mind. So I think clearly, Tamanna, I think ICICI Bank definitely in the large cap deserves definitely a good kind of re-rating. We have been telling our clients to accumulate the stock on every decline. As far as IDFC First Bank is concerned, I think there's clearly some concern on the slippages, on the asset quality, and I think numbers have been far below expectations. The stock could see a little bit of correction. I mean, the only positive fact is that the CASA is still pretty healthy at around 47-48%. But I think clearly over the next couple of quarters, IDFC First Bank could possibly face a little bit of problem because a lot of unsecured book, is the point of concern, especially, from the SME, MSME, and obviously whatever microfinance funding they do. So I think this is some area where we believe that the correction could take a little more than 3 to 6 months. So I think, IDFC First Bank could see further selling pressure, and ICICI Bank, according to me, I think very good numbers in a very challenging environment. So ICICI Bank could definitely, obviously perk up in this market, despite the fact that today we may have a gap down opening. I think Tamanna, clearly, this time market expectations from the budget are very low, and I think my sense is the markets would be keenly waiting for finally what comes out on the 1st of February. I think today I would not be surprised that most investors or traders would like to keep their positions on hold because clearly the way global headwinds are shaping up, anything negative on the global market front could completely negate any upside kind of possibility. So I think yes, I think within the sectors which really look interesting are definitely infrastructure, cement. Typically, my sense is the hard sectors like typically the capital goods sector. So these are sectors where I think the government could do a little bit of policy announcements to encourage capital investments. At the end of the day, housing continues to be a very strong kind of mass kind of demand driver. So I think real estate also could be a possibility where I think some positive announcements could come in. But I think overall the markets are not looking at anything extraordinary. I think the only thing the market is expecting is that no negative news or no negative announcement comes in, because last year capital gains tax was increased. That became a big disappointment, and I think this time markets are expecting that at least on the middle class front some relief is given. Consumption measures to boost consumption is increased because clearly the economy is in a downturn. Consumption has got affected very badly, and I think the government definitely will do something, but whether it will be completely positive for the markets is something we'll come to know only on the 1st of February. So I think it's better to wait and watch now rather than trying to buy it now. It's better maybe another week or so. I think everything will be very clear. No, I think Macrotech would be a better choice. I think clearly my sense is that numbers have been very strong. DLF has also posted very strong numbers, but we have been more positive on Macrotech, considering the fact that it operates in a very premium market. The order book visibility is also pretty strong, and I think clearly, I think over the next say 6 to 12 months, the kind of projects and the kind of inventory which they are building, I would not be surprised that there is unlikely to be any big margin pressure, and this is despite the fact that interest rates have not come off. Hopefully, in the next 6 months, if interest rates are cut, then I think that would be a further trigger point. But I think clearly Loda has got obviously better earning triggers compared to DLF. So FY26 should also be significantly better as compared to last year. Uh, Definitely, I think, see, clearly one can look at ICICI Bank, one can look at maybe, smaller banks like Federal Bank. Our sense is that, most of the pain is there in the price, but I think clearly for the sentiment to improve, to see better numbers, we may have to wait something beyond the March quarter. ICICI Bank definitely deserves to be, added to the portfolio because considering the fact that, all parameters except growth have been slightly tepid, but they have done a commendable job in a tough environment. And I think, the next 3 to 4 months, hopefully, if some big announcements come in the budget, that would be like a booster shot for most of the financial services and the banks, specifically the private sector banks. So we continue to be positive on ICICI Bank. Federal Bank is also a very solid play, a very strong network, a very good and a strong balance sheet. So I think, here also one could see maybe some weakness now, but clearly from a slightly medium term kind of time frame, Federal Bank around 170, 175 can be a good accumulation kind of point. Alex, if you look at the JSW Steel numbers were slightly better than what the street expected. And I think despite the fact that the fourth quarter is unlikely to be very strong, I think we seem to be at the bottom end of the cycle. And hopefully, if global metal prices improve, the government also announces some, measures in the budget and going forward. I think clearly, these levels are possibly levels where further downside looks pretty limited. I think the benefit of investing in such companies at the bottom end of the cycle is that the downside is limited, and normally decisions don't go wrong when you actually buy at the lower end of the bottom end of the cycle. So I think clearly JSW, Tata Steel, which releases numbers today, could possibly be a good attractive bet if somebody takes a 6 to 12 month kind of view. Because once global metal prices start moving up, China starts buying, and obviously India, you're going to see a lot of infrastructure buying, infrastructure announcements. So that actually is going to drive a lot of steel demand. So I think we are positive on the sector, but yes, I think you need to give a slightly medium to long term kind of time frame when you look at these companies, at these levels. Within the cement pack, we continue to like smaller cement companies. I think Heidelberg Cement, Tamanna, looks pretty interesting. They've gone in for a expansion. Plus, I think my sense is that at these levels, the risk reward could be quite solid, provided the Jan to March quarter is pretty good because cement prices have gone up by 30, 40 rupees a bag. And I think clearly with the expansion, volumes also will be available. And plus, if housing and real estate are given a booster shot in the budget, then I think, within the cement space, this looks an interesting bet. It's consolidated around 200, 215 levels for a long time. So we have been advising, to buy this stock, for a slightly longer time frame. This could be an interesting opportunity for a slightly good investment time frame.